Welcome back. Well, Astral has swung back into profitability, delivering headline earnings per share of just over 19 Rand. This comes as the poultry player's turnaround strategy pays off, allowing it to eliminate 1 billion Rand debt. And joining me now is the company CEO Chris Schutte. Thank you so much for your time, Chris. Chris, how would you actually describe this reporting period after the previous year that Astral had?
Good evening, Zanati. Yes, I think by now everybody is aware of the disastrous year we had the prior year. First time ever in our history that we made a loss. And that came about from that extensive load shedding, the bird flu that almost wiped up all of our breeding stock, and then, of course, very high raw material input costs. So those three combined put us in a situation where we made a loss. And then, of course, we built up quite a sizable load of debt. And if you look at this year, no bird flu, less load shedding, and we've been able to pay off that debt of almost 1.1 billion Rand over a period of 10 to 12 months. So we quite happy about that scenario. We had a program in place called 3R, or Reset, Refocus and Restart. We turned the company on its heads and started almost every procedure over and analyzing everything. And here we are today with our third best results in our 24-year history.
Amazing. Chris, what was interesting for me was actually seeing the kind of difference in the financial metrics between the poultry division and the feed division, looking like the poultry division was the star of the show. Some pressure in the metrics of the feed division. In what context should we be looking at this from?
Yeah, I think it's a bit more complex than that. Remember, in the prior period, we had this big bird era. So we couldn't slaughter, we couldn't process. So you had to keep the birds for longer on the farm, and they grew bigger, and you had to feed them way beyond our average slaughtering age. We normally slaughter a bird at the age of about 33 days, and these birds grew to about 50 days from time to, and you had to feed them. So the feed division benefited from the prior period, selling more volumes into the poultry division. This year, it was just the other way around, where we could restock our birds and we reach our average age and weight at the particular time, which is our target day. And so you needed less feed. So last year it was a benefit to the feed division. Now, on the back of that, you report a normalized year in the feed division. But then you also see the benefit on the poultry side, where we didn't have to feed that excessive feed.
Yeah, it's really good to contextualize those things. Just looking at, because you talk about the major headwinds that you experienced in the previous reporting period. How is your cost base looking now in the absence of those major headwinds?
Now, if you look at feed, which is about 65 to 70% of your total cost, over the past year, we had a bit of relief from better price raw materials, but that was short-lived. Then we had the drought. So going into the next 3 months, we're going to sit with this El Nino effect on the drought and higher soft commodity prices. But then on the other hand, if all your efficiencies are in place, from a farming perspective, you get that benefit at the end of the day on the poultry side.
We're talking about these efficiencies. How much recovery have you had in your margins?
Well, the margin is still paper thin. Last year, we had a negative margin. This year, the average margin in the broiler side was only 1.3%. So it's paper thin. So anybody out there that think we're profiteering now that we report a improved profit, the margins is the thing to look at and not the pricing of chicken. So you will understand that a 1.3 margin for a high-risk, volatile business like this is too thin for comfort. So the pricing is not always the measurement tool, it's the margin.
All right. Well, Chris, with this turnaround year and this recovery, what are your working capital needs looking like? And are they having any kind of impact on your balance sheet standing?
Well, look again. Last year, the working capital was impacted by birds that were longer on the farm, but at the same time, we had the bird flu and our breeding stock was almost eliminated.
Yeah.
This year we had to restock. So it's two very different years. We fully restocked on the broiler breeding side. So there is a small improvement, but it's also 2 years with very, very different circumstances.
All right. Well, Chris, as we look to the short to the medium term, of course, we know that you are taking your retirement at the end of January. But just looking at the short to medium term in terms of the priorities that Astral will be focusing on, just walk us through that on that outlook.
Well, I think the first, again, is to watch this weather phenomenon very closely and adopt your buying or procurement of soft commodities close to the market and the understanding of these weather forecasts. That's the key thing. That, as I said, that drives 65% of our total cost. And then also the additional cost we have on farm, like additional diesel for generators. We still have them. It's not just about load shedding. It's also about the failure of infrastructure and the distribution of electricity that's under threat. So we still run generators. We want to eliminate that. We've got a huge bill on carting water by road because, again, failing infrastructure from the municipalities. So we will focus on those things. But I think one of the key things to look at for the production of food is the availability of water. I think that's going to be a major concern. So we're trying to become self-sufficient there. But everything that we try to become self-sufficient on, where there's a lack of service delivery, add cost to the business. So chicken is becoming more expensive, not because we're profiteering, but we're trying to make up where the government systems and the municipalities are failing. And of course, you know, we have to land on our feet every year. We cannot afford to produce affordable protein, to not produce it to our people in the country.
All right. Well, thank you so much for your time and giving us insights on the numbers that came out from Astral Foods. Chris, that was Astral CEO Chris Schutte.